And one of the things that has always been very attractive to Solana, and one of the things that attracted me to the ecosystem, is Toly is very crypto forward. He's not just Team Solana. He's like, no, we're in competition. We're going to all go out and build the best things we can. And good luck, everybody. Is a very refreshing way versus the fixed pie approach that has been a dominant narrative in the space. And by doing what you're doing now and saying, listen, over time, we'll let everybody come in and do stuff, is the right way. One of the things that really interests me is how to create network effects. Network effects is core to the understanding of the exponential age and core to the understanding of cryptocurrencies. It's how network value is driven. And that's driven by something called Metcalfe's law. And Metcalfe's law is basically the number of nodes on the network and the total value transacted on that network as well. These are really important things to understand. And once you crack that, you crack the understanding of what drives value and what drives price in this exponential age. Now, there's really interesting ways that people build network value. And I think what Solana have been doing with the mobile phone is super interesting. At first, you might think, why a phone? But actually, it's much more nuanced than that. In fact, it's a very, very clever way of creating network effects.
Raoul Pal, co-founder of Real Vision, sparked debate after sharing his thesis on the current market cycle. According to him, Ethereum is expected to outperform Bitcoin, while Solana could eclipse Ethereum, and SWI could even surpass Solana thanks to its adoption curve. In a post on August 25th, Paul outlined his predictions for the entire market cycle. His overall thesis is that Ethereum will outperform Bitcoin, Solana will outperform Ethereum, and SWI will outperform Solana due to their respective positions on the network's adoption curve. As for the cryptocurrencies in question, Bitcoin fell to $111,049, a 3.5% drop last week and an extension of its monthly losses to nearly 6%. Meanwhile, Ethereum was trading at $4,572 after hitting an all-time high of $4,946 on August 24th, according to CoinGecko. Despite this rally, technical analysts warned that bearish divergences in the RSI and overheated derivatives activity could lead to corrections towards the $4,100 area. Despite this asterisk, the world's second largest cryptocurrency outperformed its main competitor last week, with gains of over 7%. Solana also garnered attention, rising 8% over the past 7 days to $196.08, outperforming both Ethereum and Bitcoin, though it remained 33% below its January high of $293. SWI, on the other hand, generated the most controversy, trading at $3.45, down 2.5% on the week and more than 35% below its January high. Critics of Paul's projections argued that the token lacked developer appeal and clear demand. According to Raoul Pal, Solana's phone is the masterstroke for the new cycle high. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
This idea of using a phone is really about aggregating attention to create network effects around Solana and its ecosystem. It's a really, really clever idea. Now, it's a high stakes idea, but the idea is if you can find a place where everyone can discover anything in the Solana ecosystem, you can create flywheel effects and value creation, and that creates value on the network. And I think how they're thinking about it is really quite groundbreaking, and I think we'll see other people trying to discover ways of doing something similar.
Some major altcoins are expected to come out of the waiting room, potentially extending their rally into the first quarter of 2026, according to Raoul Pal. According to his observations, the Total 3 Index, which measures the market capitalization of all cryptocurrencies, excluding Bitcoin and Ethereum, is ready to launch. The other index, digital assets outside the top 10 by market capitalization, remains in waiting mode, the expert noted. We must learn to be patient. The path is clear, but one should never expect a perfect outcome. Order matters, he asserted. He emphasized that the pace of changes in the key indicator of overall global liquidity will only increase as the US, EU, China, and Japan need to refinance their debts. Bitfinex analysts believe that altcoin season won't begin until higher-risk cryptocurrency exchange-traded funds, ETFs, are approved. Cryptocurrency adoption is accelerating faster than the nascent internet. In less than a decade, the number of cryptocurrency users has grown at an astonishing rate, and experts say that if this momentum continues, cryptocurrencies could reach billions of users by 2030. Paul compares 5 million internet users with 5 million cryptocurrency wallets, showing that cryptocurrencies are spreading twice as fast. He predicts that if this growth continues, the global number of cryptocurrency users could reach 4 billion by 2030. In just 9 years, the number of users has increased by 137% annually, reaching 659 million by the end of 2024. The internet reached 187 million users in 2000, with an annual growth rate of 76%. He predicts this could even boost the market from the current $4 trillion to $100 trillion by the early 2030s. Driven by adoption and continued devaluation of traditional currencies. According to Paul, 90% of short-term cryptocurrency price fluctuations are due to the depreciation of fiat currencies. Over the long term, the strength and outperformance of cryptocurrencies relative to fiat currencies is entirely due to their adoption. For investors concerned about volatility, Paul suggests considering the bigger picture rather than panicking over short-term dips. He advises focusing on the overall growth trajectory of cryptocurrencies rather than worrying about specific month. A 2024 report from Andreessen Horowitz estimates that between 30 and 60 million people actively use cryptocurrencies each month. Meanwhile, the Boston Consulting Group predicted that cryptocurrency adoption could reach 1 billion users globally by 2030. When a former Goldman Sachs executive liquidates nearly all of his traditional investments to everything in cryptocurrencies, the financial world takes note. Paul did just that, transforming himself from a traditional macro investor into one of crypto's most ardent institutional advocates. His radical portfolio shift reflects more than personal conviction. It also reflects a fundamental rethinking of wealth distribution in the digital age. Paul's thesis on cryptocurrencies begins with a rigorous analysis of traditional monetary systems. He argues that unprecedented money printing by central banks around the world has led to what he calls the great debasement of fiat currencies. According to Federal Reserve data, the M2 money supply increased by approximately 42% between 2020 and 2025 alone, the largest 5-year expansion in decades. Paul has publicly stated that he keeps approximately 98% of his liquid net worth in cryptocurrencies, with the remainder in cash to cover operating expenses. This extreme allocation reflects his conviction that we are witnessing a historic monetary transition that demands equally historic positioning. Paul's confidence is bolstered by growing institutional adoption. He cites companies like MicroStrategy, which has accumulated $601,550 on its balance sheet, and Tesla's historic purchase of Bitcoin as validation of his thesis.